Hi everyone, let's go over my bullish and bearish medium time frame, low time frame and micro Elliott Wave scenarios on Bitcoin. Starting with my medium time frame bullish scenario, where we are looking at a finished ABC zigzag structure, after which we now expect a continuation to the upside in a bigger impulse. For me, this feels as an alternative scenario for three reasons. First of all, this wave C is shorter in time compared to wave A. If you take a trend-based fib time from the beginning of A to the low of A to the high of B, you will see that this wave C over here is about 62% of the time it took to develop wave A, while usually a wave C is a little bit longer than a wave A. It is not impossible, it's just a little less common. Also, the support that we had over here for a wave C, there was no target box. I didn't have any strong supports in this area. We only had a bit of a support resistance flip that we identified at the time, but I really enjoy my target boxes for pivot points on the chart, and I didn't have one over here. And lastly, we have this potential 1-2, 1-2 scenario. So we have a 1-2, then a bigger 3-4-5 in blue, and then inside the wave 3 in blue we are then looking for another 1-2-3-4-5 to then finish the blue 3. However, as you can see, the trend lines are diverging, and preferably in a 1-2-1-2 scenario you see converging trend lines, but that is not the case, which makes this scenario therefore more of an alternative to me. If we then go to the more bearish scenario, we're looking also again at an ABC, but then the ABC is part of a bigger W, followed by a wave X, where we had two main targets for this wave X, and one, as identified, was the highs at 28.3k for a potential reversal, and the other one, in case price would move to the upside, it wasn't preferred, but as an alternative, was the target box over here between 28.9k and 29.2k. As it stands now, we wicked above these highs when I move towards the downside, where if this is the end of wave X and we are then looking for a wave Y to the downside, this wave Y has different targets. As you can see, the 0.618 is one of them, taken from the high to the low of W to the high of X, which sits just below the double bottom over here. So that could be pretty nice for maybe a wick below and then eventually continuation to the upside, or eventually moving maybe all the way down here in potentially a three-wave structure like this, because wave Y needs to be a three-wave structure. Now what is interesting is that this wave W most likely is a zigzag, and therefore this wave Y can have a couple of scenarios that are written in this box over here. So potentially wave Y can be a double zigzag, a flat, or a triangle, where either then the 0.618 or another common target for Y is the 1 to the 1.236 between 23.7k and 22.7k can be interesting targets. This one is relatively close to the blue target box, which I think is nice because many people are waiting for support over here. But if we manage to dump down through this area, bait everyone that is trying to buy here for lower prices, and then find support here for upside, that would be actually pretty nice. But let's go into these scenarios, right? So I actually got them in separate folders one by one. So if we are looking at a double zigzag, what can we expect? Well, something like this, where we then have a WX, eventually a Y, a zigzag in W, any corrective structure in a wave X, and then another zigzag structure in a wave Y. What you are seeing over here is simply a bars pattern, is a copy from the chart of this wave W. Of course, a wave Y can have a completely different 5-3-5 structure, but it is just to show you guys what is possible. And also for a wave Y, if we compare the time of W to the time of wave Y, then preferably this wave Y will take at least to the 0.618 fib time of this wave W, taken with the fib time tool from the high to the low of W to the high of X, which is currently sitting on Thursday the 15th of June, with the 1-to-1 over here sitting on Monday the 26th of June. So in this scenario, we're then looking for a 5-3-5, which is then a double zigzag corrective structure. If we then go to a potential flat scenario, which I think might be the most interesting one, because it will bait a lot of people. And even though, you know, the statistics, right, 90% of traders tend to lose, and I think this scenario might be one of those like typical baiting people in longs over here, baiting people in shorts over here for then continuation to the upside type of scenarios. Now let me explain what I mean, right? Because this scenario can wreck a lot of people basically. So what we're then looking for is a flat. So we then have a zigzag in W, any corrective structure in X, and then we're looking for an expanding flat that I have over here, which is the most common like flat structure, an expanding flat, and then a 3-wave A, 3-wave B, and then a 5-wave C to the downside. Now wave A by itself can be any corrective structure, where maybe what we're looking at right now on the lower time frames might only be the very beginning of eventually maybe a 3, maybe another 3, and then another 3 to the downside, or maybe you get an expanding flat by itself in wave A. Very difficult to judge at this moment in time. Maybe this is going to be a 5, 3, 5 like this, we don't know. But it can have any corrective structure except for a triangle. Wave B is the same, any corrective structure, for then eventually a C to the downside. And what I think is interesting is if we look at my target boxes over here as well, that potentially this wave A might take the lows for a bit of a liquidity. We have a double low over here at 25.8k. So whatever the structure in A is, potentially A might grab the double bottom for liquidity, for then a move towards the upside where we still have the target box over here between 28.9k and 29.2k for some interesting resistance. Maybe even taking the triple top that we have around 30k, so we might actually get the triple top for then a move to the downside. And what is going to be interesting is that people after this move, and when this move happens, we take the lows, move to the upside. When people are going to see potentially the 30k's highs being taken, the potential breakout people are going to be like, yo, this is long material, right? We're looking for upside, market structure change and all that stuff. But instead, potential resistance for then an impulse to the downside. And what is interesting about this scenario is this impulsive structure. Because the moment people see an impulsive structure to the downside, they think about a bigger impulse, right? They think much lower prices. But then instead, this impulse is part of a potential wave C, which is then a corrective structure, after which you then expect upside. So instead, people are going to be expecting much lower prices to whatever level, but then instead it's going to turn around. So baiting people on the highs, baiting people on the lows, leaving people out of the market, and then move up. I think that would be actually very, very interesting, and that's why I'm spending a little bit more time over here in this particular scenario. This is very hypothetical, but just from a perspective of trading psychology, I suppose this can be very, very interesting. And the final scenario for a wave Y can be a triangle, where we then have a WX and then a triangle in wave Y. Now, a couple of interesting trading or triangle rules that are important to know is that 4 out of the 5 waves in the triangle need to be a zigzag, meaning that you have then a 3-wave structure in a 5, 3, 5 in A, also in B, C, D, E, that's 5 out of 5. And if one of those zigzags is or one of those waves is not a zigzag, then usually it's going to be wave C or wave D that is not a zigzag but another type of structure. So we're then talking about C or D, because in this scenario you're then looking for an A, B, C, D, E, and eventually you then expect more upside for new highs to be made. And also throughout this pattern, you want to see the volume reduce. So this move then to the downside in a wave A most likely is going to have the highest amount of volume. And then while this scenario is going to play out, you want to see the volume decrease in a contracting diagonal, or a contracting triangle. So let's wait and see how this develops, because all of these 3 that I've just shown you, the zigzag, the flat, as well as the triangle, are still very hypothetical, but I want to prepare you so you know what to look for on the chart in case price is developing, right? So if we then move to the low time frame scenario, then over here you see again the trend lines that are diverging, not supporting a very bullish 1-2-1-2 in my opinion. Besides, this wave 1 very difficult to count in a nice 5-wave structure. It's better to count in a 3-wave structure, but we can't disregard a bullish scenario. And also this wave 2 bounced on the 886 taken from the low to the high of wave 1, which is a rare target for a wave 2 and a more common target for a wave B or a wave X. Now in this scenario, you want to see that move to the upside with volume increasing as well. You want to see volume increasing while price is moving to the upside. And at the moment, the volume is not very sexy for this particular scenario, right? Yeah, we do see a couple of high peaks, but the average volume to the upside, because that's what you want to see, high volume up, low volume down. Well, at the moment, it's a little bit like, the other way around. We had quite low volume to the upside besides the peak, but I'm talking about the average volume of the move up. And now during this move to the downside, you can see the average volume over here is like increasing. It's not really what you want to see in this particular scenario, for then a lot more upside to come. So a little bit of an alternative as well, right? Where in the bearish scenario, we are then looking for a structure that is already finished, so either an ABC or a WXY. Doesn't really matter, as the target area is this target area anyway, which has been very nicely respected. Looking for that key level for a liquidity grab and a move to the downside for a beautiful trading scenario over here as a swing failure pattern trading setup, as well as then the bearish divergences that we had locally, CVD divergences, for then a move to the downside. And what I like about this scenario as well is that this wave C or wave Y high has been made between the 1 and the 1.618 fib time, taken from the low to the high of A or W to then the low of wave X with the fib time tool. And that's exactly what you also want to see for a potential wave C or wave Y. So in my opinion, if we go up once again, that I'm looking for eventually a potential scenario as explained in the potential flat scenario, right? So for me, this feels very much like the end of something, where this move to the downside can be a new beginning of a new structure to form. If we then do finally go to the micro scenario, let's hop onto the 1 hour time frame actually, then we are then looking, right, for a new wave 1, eventually a wave 2, and a bigger 3 to the upside. However, what I didn't yet tell you guys is that the high over here of wave 1, funny enough, has the highest amount of volume of this move to the upside. So we then have a move to the upside where the highest volume is at the end of this move. Now, if we talk about Elliott waves and about impulses, you want to see the highest amount of volume in a wave 3. Not at the end of an impulse in a wave 5, you want to see the highest amount of volume in a wave 3. So preferably from an impulsive Elliott wave knowledge type of theory, you want to have some sort of a 1, 2, then a wave 3, corrective 4, and then a 5. And then this wave 5 is going to have lower volume, even though price makes a higher high. And then one can identify potential wave 5 for then a corrective structure to the upside, downside. But in this scenario, the highest amount of volume is at the end of the impulsive structure, which is something that happens more commonly in a corrective structure wave C in potentially an ABC or a WXY scenario. So that is not really something you like to see. Now, you can have in a wave 1 a potential extended fifth wave, and therefore in an extended fifth wave, you will have the highest amount of volume in a potential wave 5 if you then have a 1, 2, 3, 4, and then an extended fifth wave. But nonetheless, even if wave 5 is going to be the extended wave 5 in an impulsive structure of this wave 1, you still want to see wave 3 inside that wave 5 to have the highest volume, and wave 5 of then the bigger wave 1 over here, less volume. So it like this over here isn't really nice to see for a bullish scenario. That's basically what I'm saying. Now, in this scenario, if we keep in mind the potential wave 2 targets between the 0.5 and the 0.786 are the most common targets for a wave 2, pulled from the low to the high of wave 1. So this is very important, and we do have some support below price. We also have just around the 0.618. We also have the monthly current month point of control at 26,875, which after today is going to be a monthly naked point of control. So that is actually quite interesting indeed. So that is some support. We also have the golden pocket over here, and we have a target box right around the 0.66 of the golden pocket between 26.8k and 26.6k for some additional confluence. And then if in case price is going to push through, some support over here between 26.3k and 26.2k. So we have to wait and see what price then is going to do around this area. And the bearish scenario, well, that is a question mark at the moment. As you can see as well, we don't really know. Like, we could have a 3-wave structure over here followed by another 3 and then a potential 3-wave to the downside, or it can be a 5-3-5. This bearish, like micro bearish scenario, because in the bearish scenario we expect this to be the end of something and this structure to basically be the beginning of eventually a bigger move to the downside, we really need a little bit more time for price to show itself, show its hand, and then we can analyze the chart, because there's a couple of possibilities at the moment. And basically the probabilities are very equal. This can be a 3-wave structure followed by another 3-wave structure and then a 5-wave move here, but you want to see then a 3, 3, and then potentially like another 3 like this, and then a WXY. That's a potential. Can be a 5, 3, 5-wave move in an ABC, or a potential 1, 2, 3, 4, 5, because volume over here has been increasing to the downside. So yeah, it's quite difficult to judge what's happening over here in the more, let's say, bearish scenario, because in the bearish scenario this is the beginning of something. So yeah, I need a little bit more time for price to show its hand. However, I hope this video was helpful or valuable to you. Please check out the most recent educational update I've done about the best trading indicator you can use, in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I will see you at the next one. Bye bye.